Take a look at the indicators and you will find one after another showing all-time records. We look at the stock prices which continuously beat record highs and then turn in any other direction and you will see record lows. Everything is falling apart except for the prices of stocks. Smells fishy to me. You came here for the truth, so let me unveil that for you. Today we are going to look at various economic indicators. Let's begin. This is the yield curve. Many of you have been following this. I've been covering it somewhat on here. Just wanted to show you that this is on a downward trend yet again. The volatility has shown us that there is nothing out there in the world that can spook this market. We are now at a level that was, as of today, as of this recording, 8 on the Volatility Index, the VIX. That tells you, as a trader, as an investor, that there's nothing to be worried about. Think about that for a second. With everything you've been seeing in the news, all of that uncertainty, that should be making its way through the VIX. You should be able to see that, but it hasn't been. It hasn't been doing that for years. It's just been declining. If there's something you want to bet that's going to go down, the VIX is where it's at. And that doesn't make any sense because technically there is a lot of uncertainty over the past year. We've seen that, but it doesn't show up in the VIX. It's broken. That's what people don't understand. It's broken. All right. Of course, the truth is that the market believes that the central banks will always be there in the event something should happen. Now, the Baltic Dry Index, I think this is one of the more important indicators, not the only indicator. We're talking about shipping here, okay? And you could see that right now we have dropped here. But if you look at this chart, you'll see how it's on a rising trend. So what am I talking about dropping? Well, yes, in a very short period of time, it has dropped. But look at this from 2008, and you get a different picture. This is showing you just from 2015. I've shown you the charts here before, showing from 2008, we are at extreme lows here at this time. We'll see where it goes. I mean, it's done this before, but I believe that the real economic indicators are really showing their weakness right now. Are stocks going to go up? Yes, stocks are going to continue to go up as long as central banks keep buying up shares. I'll talk more about that in a moment. Palladium. Now, when we talk about precious metals all the time, we seem to ignore palladium, but it was the #1 commodity last year. Soaring high, palladium climbs to record amid shrinking supply. This is the price itself. I'll show you the supply in a moment. You can see what had happened years ago where it skyrocketed, but hey, we are at that level once again, and many people thought that would never happen. But here we are today. Looking at that. So during the financial crisis, you saw what had happened, and it's been fluctuating surely, but right now at record highs. Look at this. The NYMEX Palladium Inventory has just been absolutely decimated in recent years. It's been going down further and further and further, and despite the noise in between, it's simply on its way downward. And if this continues, the price will continue to move upward. It's a simple matter of fact. Now, I was talking about the central banks. You can see here that still plenty of liquidity being added to the markets. ECB, BOJ, and the Bank of England buying a combined $200 billion every month. So you're telling me in the media that the Federal Reserve has stopped printing, QE3 is over, and therefore the markets are safe and sound. It can withstand itself here and everything. You're talking about just 3 central banks. What about the rest? There are so many central banks out there that are buying up shares, ETFs, toxic debt, corporate debt, whatever. They're buying up everything. And that's what they tell us. Imagine what goes on behind the scenes. Look at this. I just like to see the trends, okay? We know where it's headed. Now, why? Why are they doing this? Well, Central banks know that there aren't any more real investors that have any significant weight. We saw after the financial crisis, things were getting restored. A lot of very big investors, billionaires and such, they started getting to things like farmland. They started getting into big real estate blocks. They were purchasing up real assets. Big time. Of course, that moved around and everything. But what I have seen is that they were moving a lot of their money there. Now, they've obviously been profiting off of everything ever since. But it doesn't matter. They see something coming and they're always years ahead. I don't know what it is exactly, but I can tell you, whatever goes too far eventually reverts to the mean. That is a historical fact. Central banks have been buying shares. They've been buying up everything. Now, many people would say, why would they pull back on their liquidity knowing that would collapse the market? Well, isn't that a beautiful way to transfer wealth from all of these people who have been riding this wave into the hands of the elite? Think about that for a moment. Doesn't it make sense? It's the most brilliant way to transfer wealth. Every so often, you just suck it back in. Just take it. People make money, they save money, they invest money, they put into their stocks, they put into their mutual funds, and then they take it away. It's a genius plan. It's been working every so often, and they allow these manias to continue. And I say that in a way that it's the central banks buying the shares, pushing them up so that people ride the wave and then they can take it from them. They're doing this with intention. And how long will it go? I have no idea, but the longer it goes on for, the more money they could take. It's a genius plan. I really commend them on their efforts for how well they can swindle people. Now, this report is talking about Manhattan real estate sales. Something I found very interesting. Number of sales closed is actually down, minus 25%. That's a significant number. Of course, the prices are extremely high. Let's not discount that for a moment. But average sales price, it isn't necessarily where it was predicted to be. Look at this. Quarter 3, 2017 at 2 mil, and it had gone down $100,000. Still, it's very significant, obviously, but it has been declining. Over the past year, prices have come down slightly. That's the average sale price. We are still talking about astronomical prices, and I believe that they're suggesting that it's because of what's happening with the tax laws and such. I think that generally a lot of people are just priced out. A lot of people have bought into the homes. Maybe they see that uncertainty despite what they're seeing on the VIX. And I just have to believe that the market is just, at this point, worried. They're priced out from a lot of these things, and they simply cannot afford any more, particularly as interest rates start to increase. So that's all for this video. If you found it informative, please give me a thumbs up. Remember to support this channel. All you have to do is give me a thumbs up. Give me a thumbs up, comment on this video here, and you will also be well advised to subscribe. I'm heavily biased, of course, but if you subscribe to the channel, you'll be getting new information every single day. I cover a lot of this information as fast as I possibly can, as concise as I possibly can. I hope you do appreciate that. Please support this channel. Last but not least, if you found the video informative, I know you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can look through the books for yourself. The links are in the description below. Take care.